Welcome to the Gym Success Podcast. We're here to help all of you, gym owners, operators, managers, salespeople, gym entrepreneurs, and personal trainers, cut through the noise and get you well-informed quickly. I'm Bonnie and
And I'm George. And today, folks, we're diving deep into a really valuable resource. It's a white paper by the renowned gym business expert, Jim Thomas.
That's right. Our mission here is to pull out the most critical insights, the actionable strategies for your business.
Yeah, exactly. The paper's titled Unsecured Funding Options in the Gym Industry. Fast, flexible capital for growth, expansion, and stability.
And what's so interesting right from the get-go is how it frames this whole issue. It talks about something almost every single fitness pro faces.
Absolutely. I mean, for so many gym owners, cash flow isn't just, a line item. It feels more like a tightrope walk sometimes, doesn't it?
Totally. One unexpected equipment repair, maybe a slow month, and boom, you're stressed, you're juggling bills.
Right. But what Jim Thomas's paper shows, and I think this is brilliant, is that this struggle, well, it doesn't have to be the norm. He says the real ultimate competitive edge isn't just having money, but having agile capital, fast capital.
Agile capital. I like that. It turns that tightrope walk into more of a confident sprint, maybe.
Exactly. That's a great way to put it. And Jim Thomas really emphasizes whether you're running a big box gym or a tiny boutique studio, or even if you're a mobile personal trainer, the need for extra funds, it's pretty much guaranteed at some point.
Yeah, he lists those common things, sudden cash crunches, making payroll, those urgent repairs, like the main treadmill dying on a Monday morning.
Oh, yeah. Nightmare scenario.
Or even those big strategic moves like an expansion opportunity that you just have to jump on now.
Which brings us right to a really crucial point in the paper. If everybody needs capital, why aren't traditional banks always the answer?
Good question.
And the paper's pretty direct about it. It says they're often just too slow or too inflexible for how fast things move in the fitness world.
Yeah, I can definitely see that. He mentions those frustrating processes, right? Like the rigid credit limits, needing tons and tons of paperwork, collateral requirements.
Exactly. Banks often work on a totally different timeline. They like long-term stuff, asset-backed loans. It's a mismatch sometimes.
So what's the alternative then? What does Jim Thomas really push?
Well, this is where it gets interesting. He positions unsecured non-bank funding as the rapidly growing solution.
Okay.
Because it offers that speed, the quick capital,
Yeah.
and simpler qualification, plus, and this is huge, unrestricted use of the funds.
Okay, let's unpack that term then. Unsecured funding. What exactly does that mean for our listeners, George?
So it's financing that doesn't require you to pledge business assets, like your treadmills, your weights, or even personal property like your house as collateral.
Hello.
Instead, the decision is mainly based on your creditworthiness and your income.
That's a big difference. A game changer, maybe.
It really is for many people.
Because it means it's actually accessible, even if you don't have a ton of hard assets tied up in the business. Maybe you're just starting, or you run lean.
Exactly. If you've got a stable operation or just a solid personal financial history, this can be an option.
And you mentioned the best part, the sort of superpower. No restrictions on using the money.
Yeah, that's really a key takeaway here. The paper lists out great examples just to show how flexible it is.
Like what?
Well, you could use it for a big marketing push, hiring key staff, doing that renovation you've been putting off, covering payroll if things get tight,
Okay.
buying better equipment, maybe even acquiring another gym or launching totally new programs like nutrition coaching or something. It's really versatile.
That flexibility sounds incredible. And the benefits section in the paper, it really drives these points home, doesn't it?
It does. We've talked about no restrictions, no collateral needed,
Yeah.
but also the speed. Think about same-day pre-approvals.
Wow, same day.
Yeah, and typically getting the actual funds in your account within, say, 7 to 10 business days, that's lightning fast compared to traditional routes.
Huge difference. And the application process itself.
Simple,
Yeah.
minimal paperwork,
Yeah.
and surprisingly high approval odds, according to the paper. Plus, it mentions you can even use cosigners.
That opens up possibilities.
It does. And maybe the most powerful point for just exploring it, it costs absolutely nothing to apply. Zero risk to just see what your options are.
Okay, so no cost to apply. And what kind of funding amounts are we generally talking about here?
Well, the typical range is pretty significant. It can be anywhere from, say, $50,000 up to over $500,000.
Yeah.
500,000 plus.
Wow.
Of course, that depends on your specific situation, your credit, your income, the business strength.
Right.
But if you think bigger picture, this isn't just patching holes. Jim Thomas calls it transformational capital.
Transformational. How so?
Well, think about it. A traditional loan might let you buy a thing, right?
Yeah.
Because it's tied to an asset. But what if the real opportunity is snapping up a competitor who's suddenly selling?
Yeah, you need to move fast on that.
Exactly.
Mm.
Or launching a killer marketing campaign that could like double your leads next month. That stuff needs quick, flexible cash. This unsecured funding, it gives you that strategic agility.
So you shift from just reacting to problems.
Proactively seizing those growth opportunities.
Mm-hmm.
Opportunities that might vanish if you have to wait 60 days for a bank.
That makes a lot of sense. That flexibility is really compelling. But George, the big question I know listeners will have is, okay, sounds great, but can I actually get this?
Right. The qualification question.
Yeah. What does Jim Thomas say? Is it as tough as people might think?
He actually says it's often simpler than many assume. For the standard path, you generally need a credit score of 680 or higher.
Okay, 680 plus.
Yeah, and that's across all three main credit bureaus, Equifax, Experian, TransUnion. Lenders want that full picture, you know.
Makes sense.
You also typically need a personal income of at least $50,000 a year for the last 2 years, and U.S. citizenship or permanent residency.
Okay, standard stuff. But what if someone's close, but maybe their personal credit isn't quite at that 680 mark yet?
Well, here's where it gets really practical. The paper points out an immediate solution. You can apply using a credit-worthy cosigner.
Ah, okay, so you can bring someone else in.
Exactly. That opens the door for a lot of entrepreneurs who have a great business, great idea, but maybe their personal credit history isn't perfect yet.
That's good to know. But what about businesses that are already up and running? Is there another way?
Yes. And this is really impactful. The paper talks about alternative qualification. It's based on bank statement funding.
Bank statement funding, how does that work?
So if you already run a gym or a personal training business, you might qualify based purely on your business's recent financial activity, like the last 6 months of your business bank statements.
So no personal tax returns needed for this route, or even a super high personal credit score.
Potentially no. It focuses on the business's health. Lenders look for consistent revenue coming into the business account.
Okay.
They want to see no NSF's non-sufficient funds.
Yeah.
Basically, no bounced payments.
Right. Shows stability.
Yeah. And no daily negative balances, and just generally positive cash flow behavior. It's a really practical business-first assessment.
That sounds ideal for established owners who might not have, perfect personal paperwork, but have a solid cash flowing business.
Exactly right.
Okay, so we know how to qualify, potentially, and who might qualify. Let's talk about when this type of funding really shines. The paper gives some real-world examples, right?
It does. And it really highlights those moments where speed and flexibility are just crucial. Like, say you fall behind on rent or payroll.
Stressful situation.
Very. But getting quick funding can keep your doors open, keep your staff paid, prevent things from spiraling.
Dark, what else?
Or maybe you want to do that renovation, upgrade the equipment, things that directly impact member experience.
Which boosts retention and referrals for sure. People notice when a gym invests back into itself.
Absolutely. Or think about adding new services. Maybe you want to launch an in-house personal training program or add wellness coaching, nutrition, maybe those fancy recovery tools everyone wants now.
Yeah, new profit centers. Funding can kickstart those.
Precisely. And then there's the big stuff. Acquiring a competitor, opening a second location. M&A moves fast. Your funding needs to keep up.
Right. Can't wait months for approval then.
Definitely not. And this leads to what, for me, was maybe the most important section of the paper. Jim Thomas calls it the golden rule.
The golden rule. What is it?
He says too many gym owners make one critical mistake. They disqualify themselves before they even start.
How so?
They just assume.
Yeah.
Assume their credit isn't good enough, or the process is too hard, or they just won't get approved anyway, so they don't even try.
The self-disqualification. I see. So what's the takeaway for you listening? What's the actual truth here?
The truth, according to the paper, is simple. It costs absolutely nothing to apply. Zero.
Right, we covered that. No risk to explore.
You get that same-day pre-approval, often find out you qualify for more than you thought. So his rule is crystal clear. When in doubt, apply.
When in doubt, apply. I like that. Simple and actionable. What's the real cost of not applying then, George? What gets missed?
Stagnation. That's the cost. The final thoughts in the paper really hammer this home. Capital is the fuel, but speed is your advantage.
Speed is the advantage.
Yeah. Being able to act today, not in 2 months, that's what separates the strong, growing gyms from the ones that just sort of tread water, especially in this market.
So he's saying this unsecured funding, it's not just a lifeline if you're sinking.
No, not at all. He calls it a launch pad for real growth. It lets you be flexible, decisive, competitive.
Which you absolutely need in the fitness industry today. It changes constantly.
Every single day.
Wow. Okay, so this deep dive into Jim Thomas's white paper, it really paints a clear picture, doesn't it? How vital this kind of quick, flexible capital can be.
Absolutely. Whether you're just starting as a PT or you're running multiple locations.
And those insights about the different ways to qualify personal credit or through your business bank statements, that's eye-opening.
It really is. And just seeing the sheer range of ways you can use this funding, it challenges how you might traditionally think about business loans.
Definitely. And speaking of next steps, Jim Thomas in the paper, he actually invites people to connect with him directly, right?
He does. He encourages readers, if they're thinking about growth or struggling with cash flow or just planning for what's next, to reach out.
And he works directly with gym owners, trainers, studio operators.
Yeah, helping them get this fast, flexible capital and also build systems for, long-term success.
And he repeats that mantra at the end too, doesn't he? When in doubt, apply.
He does. It's a strong final push. For anyone listening, Jim Thomas can be reached at 214-629-7223, or you can email him at jthomas@fmconsulting.net.
Good to have that info. 214-629-7223 or jthomas@fmconsulting.net.
It really makes you think differently about capital, doesn't it? Not just as an emergency fund, but as a proactive tool, a strategic growth lever.
Yeah, that's a powerful shift in mindset. So, George, let's leave our listeners with that provocative thought to mull over.
Okay.
Consider this. In your business right now, what hidden opportunities might you be missing? Or what potential future crises could you maybe head off at the pass if you had access to quick, flexible capital today?
Good question. How could changing your whole approach to funding unlock that next level of proactive growth for your specific fitness business? Something to really think about.